So I think we'll, without any delay, move on to Jim Stanford, economist at the Canadian Auto Workers Union and columnist at the Golden Mail and regular media commentator on economic and financial affairs.
Alrighty, thank you. Thank you very much. I'm going to stand up just because it helps me project in the size of the crowd here. This is amazing. I first of all have to congratulate the Socialist Project on their impeccable timing. If I had known that simply organizing this seminar would bring the system to its knees, I would have bought some short stock positions this week. And also
for all socialist projects in Canada, we have to go very long right now.
Right, yes, that's right. And obviously congratulate you for the huge turnout tonight. This is fabulous. And also, from my perspective, I want to congratulate you and thank the Socialist Project for fostering a broad discussion, a non-sectarian discussion on this stuff that brings everybody in. Having a CAW person speak at a Socialist Project event is about as non-sectarian as it gets. Thank you for that. I did get an email today. I don't usually pay any attention to these ones, but this one caught my eye for some reason. It was titled, "Request for Urgent Business Relationship." The emails that come in, and they usually originate like in Nigeria or somewhere, but this one was closer to home. It says, "Dear American, I need to ask you to support an urgent secret business relationship with a transfer of funds of great magnitude. I am Ministry of the Treasury of the Republic of America. My country has had crisis that has caused the need for large transfer of funds, $800 billion US. If you would assist me in this transfer, it would be most profitable to you. This is a matter of great urgency. We need a blank check. We need the funds as quickly as possible. We cannot directly transfer these funds in the names of our close friends because we are constantly under surveillance. My family lawyer advised me that I should look for a reliable and trustworthy person who will act as a next of kin so the funds can be transferred. Please reply with all of your bank account, IRA, and college fund account numbers, and those of your children and grandchildren, to Wall Street Bailout at treasury.gov, so that we may transfer your commission for this transaction. Yours faithfully, Minister of the Treasury, Republic of America, Mr. Paulson." I did write something in Red Pepper, which is a very lovely British radical magazine. I brought 50 copies. How silly of me! But it's also on the Socialist Project website. It's also on the website, Greg says. So, I actually am very much in line with where Greg was going there, and I'm not sure how much I'll add. Maybe it'll just be kind of stating it in different ways and talking a little bit about the implications for Canada and working people today. I want to start also with how I understand the financial sector and how it works, and I think this actually is a bit of a pedagogical moment for us to collectively upgrade our literacy level around finance and what it actually is, and get behind some of the mumbo-jumbo and the mythology and the phony technicality of it all to find out what finance exactly is. There's a quote from Galbraith that says, "The simplicity with which private banks create money is galling to the normal mind." That is, there's so much mumbo-jumbo out there around an industry which literally has been given the legal right to print money. And that, at the end of the day, is what it boils down to. And I know that's a crude way of putting it, but I actually think that this is a moment when we can educate ourselves about what a charade it is, the privatization of credit creation that is at the root of this crisis, and then also get our members and constituencies to ask why we've done it that way. Obviously, of course, we start with the sort of the basic core cycle of investment and production that makes capitalism go round. I'm thinking in the real world now of a real productive capitalist firm producing some kind of good or service, investing in capital, in machinery, in raw materials, and the initial wages that are paid to its workers, supervising and organizing production of that, then selling it, and hoping that there's enough profit at the end of the day to justify the whole thing going around. And that's kind of the core process, the core engine that's at the center of capitalism. And then workers, of course, relate to that by virtue of our need to work for a living and support ourselves where our labor has been commodified. So that's kind of the core cycle at the middle of the system. Then I kind of imagine lurking above it the financial sector, these towers on Bay Street, or Wall Street, or the City of London, or Hong Kong, and everywhere else, which is a separate industry which facilitates that real process of production and employment and profitability that is the core of capitalism, facilitates it by giving money, spending power to the capitalist to finance and facilitate the investment and the productive activity that the capitalist undertakes. So in that they play, in theory, a useful role to facilitate capitalism, and sometimes it actually does work that way. Then the financiers who've invested in the company, whether it's through loans or equities or more complex forms of financial intermediation, also keep an eye on how the whole thing is going. And you can understand why. They've got a lot of money tied up in these companies, so they hire all of these analysts who sit there in Bay Street making six-figure sums to poke through the financial statistics of these companies and their performance, and every once in a blue moon to actually go out and see the workplace and see if anything's actually happening. And there's all kinds of nonsensical mythology about the role that money managers play in overseeing real production and making sure that it actually is going on the way it's supposed to, right? I always imagine the mutual fund commercials, right? Every mutual fund wants to distinguish itself from the other. And why should you invest in our mutual fund? Because we go out and make sure your money is facilitating real investment in jobs and growth, right? You know, and poking through dingy factories and finding something dusty. Oh, we won't invest in this company. And that way your money is safe. My favorite was one from Templeton Investments that used to run about 3 or 4 years ago, which was a retro ad. It was put back in the 1950s. Okay, and there was a woman money manager. Go figure. I don't know how many women money managers there were in the 1950s. Probably I can count them on one hand. So I think that's sort of historical revisionist affirmative action at play there. Well, anyway, she goes out to study some company that's inventing a jet aircraft, you know, and she's talking to the engineers about this miraculous technology that her company is helping to facilitate with its investments. And she says to the engineer, "Take me up. I want to see that it flies." And the engineer said, "Was it gas? Well, what if it doesn't fly?" And then she says, "We don't invest." Okay. Money manager as test pilot, right? Well, I mean, think of some of these scandals like Briex, it was the Arrow, it was the Averarrow, that's exactly right, Mike. Briex, all these other companies where they never even figured out there wasn't even a mine there, right, until it was too late. So, but at the same time, the industry does play this role in pushing companies to be more ruthless, right? We've seen that over and over again, to be more efficient, lay off more people, reward companies for cutting to the bone, right? And in demanding that they become very profitable. Then the financial industry also helps to distribute the surplus because they facilitate the finance, but they take a cut of the profits, right? And that way you get all kinds of complicated things happening between the actual productive companies and the financiers who help the investment take place. So they take a portion of the profits of these real companies, and then they also, as Greg has explained, the whole financial industry gets its own kind of momentum going. It becomes its own dynamic world unto itself that can become quite separated from the real sector that it's supposed to be there for. The key ideas that I take from that understanding of there being a kind of core cycle of production in the real world where companies are actually producing something and generating productive profit and creating actual jobs, and then this financial world that sort of oversees it. First of all, I don't view the financial industry as directly productive in and of itself. I know that kind of sounds old-fashioned in a way, and I've been criticized for that view, but I don't actually view the process of providing finance, while it can be a supportive role for real production when it works, I don't think it's inherently productive in and of itself. And I don't count the value, the cost, if you like, of all the people on Bay Street as actual useful output of our society. It's a cost of production, I suppose, for capitalists, but I don't view it as inherently productive. Secondly, there becomes a very complicated relationship between real capital in the productive sphere and financial capital in the financial sphere. They will from time to time fight over the division of the surplus because remember the financier is going to take a big cut of it in return for facilitating the investment and financing the investment. But they also have a shared interest in maximizing the total surplus that they can fight over. And that was the coming together of financial capital and real capital that I think was the crucial political development that ushered in neoliberalism. Financiers wanted big changes in the late 70s for their own reasons. Real employers wanted big changes in the end of the 70s for their own reasons. And it was that alliance between them that set the stage for Reagan and Thatcher and everything that's come since. Third is that financial mechanism that overlays the whole productive system complicates and in some ways obscures the relationships of ownership and power that otherwise would be quite visible. You know, in the olden days, the capitalist was the guy with the top hat who lived on the hill and took the profits from the company. I don't believe that the degree of inequality in capitalism today is actually that different from when it was then. it's just a heck of a lot harder to figure it out. Because you get all kinds of mythology out there about this being a system that everybody has a piece in, the shareholder economy, people's capitalism, and all of these institutional arrangements like mutual funds and pension fund investments and RRSPs play an ideological role as well as an economic role in making people think they actually are invested in the system. And for the vast majority of working people, they have no significant personal financial stake in the financial industry whatsoever. For the vast majority of working people, the only real wealth that they own is the equity in their own home. And all of the comings and goings of the mutual funds and so on is a sideshow, absolutely a sideshow to where their actual standard of living will be determined. But this system obscures it. So the Canadian Bankers Association can put out an actual study saying, why on earth would anyone complain about super huge bank profits? Because over half of Canadians own some of the banks, at least one share in your mutual fund or in your pension fund, right? Well, get real. I mean, that doesn't make me an owner of the bank, right? And it doesn't actually mean I'm meaningfully sharing in what's happening at the banks. The statistics on the distribution of financial wealth, I think, are some of the most underutilized statistics that the left should do more with. In Canada, for example, it's hard to get the actual detailed stuff. The richest 10% of Canadians own 60% of all financial wealth. The richest 1% owns over 30% of all financial wealth. There are 54 billionaires in Canada. Okay, so that's about a third of as many people in this room. That's as many people as just from this side of the room over. 54 billionaires. They own 5% of all financial wealth in Canada. And the bottom 50% of Canadians, so that's about 17 million people, own 3% of financial wealth. So these 54 billionaires own about twice as much wealth as 17 million Canadians. It is absolutely appalling how centralized wealth has become. Yet the operation of these markets tends to obscure that and make people think that it's a game that everybody can play and everybody has a stake in. I think that we should make it a priority for ourselves to educate people that they are not meaningfully invested in the financial market. Now, that's going to be a tricky task to do today, because everyone and their dog is going around thinking about their mutual fund. Even if they only had $5,000 in their mutual fund and it was going to be peanuts in the long-term cost of financing their pension, today they've only got $3,000 in their mutual fund and they feel shitty because of it. And that's part of the ideological role of the system. But I think we have to point out how concentrated finance is, which is why we didn't benefit that much from finance while it was on the way up, right? But we could suffer some side effects, some consequences, get caught in the crossfire on the way down. In terms of the sort of the current crisis, I think what we're seeing in some ways is very familiar. It's very much like any other bubble. Capitalism has always had its financial bubbles, its financial manias, and its crises that always follow the bubble. As Greg said, it's not a question of whether a bubble will grow up. It's only a question of exactly what is going to cause the bubble to grow up. And then it's never a question of whether it's going to burst. It's only a question of exactly how and exactly when it's going to burst. And like tulip bulbs in the 16th century, this one was based around an unsustained mania in housing prices. And then once housing prices start to go up, then people start to invest in housing, not because they need the housing, but because they think the housing price is going to go further up. And that is the logic of speculation, buy low, sell high, that dominates how the financial system works. And it absolutely lends itself to creating bubbles over and over and over again, unless we deliberately try to stop it from creating bubbles. In Canada's case, you didn't have quite the same impact with the housing bubble as you did in America, although there's elements of it in Canada. But we had our own bubble, which was the commodities bubble, which grew up around oil prices, mineral prices, these unbelievably, absolutely sinfully huge profits that were being generated in the petroleum industry, the mining industry, and some other commodity sectors in Canada, fueled stock market mania and fueled a short-term boost in income that was enjoyed in some parts of Canada, not universally by any stretch. And now that commodity bubble has popped as well in a big way, and we're going to feel the impact of that. So in some ways this was like any other of these periodic crises. In some ways it was unique. The degree of leveraging, that means borrowing money to place bets on these speculative assets, which makes you very, very vulnerable if the bet doesn't pay off. The degree of leveraging, that is playing with borrowed money, was unprecedented. The complexity and sophistication of the particular assets that were being traded was unprecedented. Even the people on Bay Street couldn't figure out actually how they worked and how they all fit together. There were, in the US, tens of trillions of dollars invested in bets on credit swap margins. And this is a very complicated financial derivative related to insuring a household mortgage against default. And people were betting on how those swap margins would go one way or the other with trillions of dollars. It was absolutely, absolutely ludicrous. And of course the global nature of the crisis, the fact that towns in northern Sweden invested their trust funds in subprime securitized assets.
In Florida, literally.
In Florida, exactly. So I mean that means that the spillover effect is being felt more widely than ever before. I think we need to look beyond the peculiarities of this particular crisis, certainly beyond some of the incremental things that the powers that be are acknowledging. You know, you hear Jim Flaherty saying, well, we didn't have enough transparency so that when people bought subprime mortgage assets, they didn't realize the risks. You know, that's just trying to get away. That's trying to escape the actual problem. The deeper problems were much more fundamental. The fact that we have outsourced the credit creation process, which is a very important process to our economy. We've outsourced it almost with no strings attached and almost with no regulations to private profit-seeking companies, who we've given them the mandate to create money and make profit from the creation of money. And that means they create money when it suits them, when it maximizes their profits. They may not create the right amount, they may create too much money at times, or they may create not enough money at other times. But it's private profit guiding the money credit creating process rather than our needs as an economy for credit and money to fuel growth and production. From that grows this inherent cycle in private banking. The private banking industry always has this cycle in terms of banks are very willing to lend money. In fact, they'll give you 80 unsolicited credit card applications a year at times, right? You're saying to yourself, why the hell do they want me to have a credit card? They don't know anything about me, right? But they are in one of their expansionary phases, and so they'll lend money to anyone. But that's always followed the moment that the risk and fear overtake greed and optimism by a credit crunch. And that's the most devastating, potentially devastating aspect of what we see today. We're beginning to see signs, I wouldn't say a lot of signs, but we're beginning to see signs that bankers are stopping lending. And once that happens, then you absolutely are looking at more than just a recession. The speculative impulse, why do we allow people to make money by just buying something and then reselling it after? That is a fundamentally unproductive role. It serves no productive function. It's exploitive at best and destabilizing and destructive at worst. The deregulation that we have allowed the financial sector to enjoy has clearly contributed to it. I think another ultimate cause of this crisis is the fact you've had this rapid expansion in the quantity of financial activity and the sophistication of financial activity on top of, in my picture, think back to the beginning, right? You've got real production here in the financial sector on top. You've got this financial sector that's going bananas up here, but the actual real sector has done very, very adequately at best, or very, very modest in terms of the growth, the capital accumulation, the investment in the real side of our economy. If you look at real investment spending in the leading capitalist economies, it's been cut in half as a share of GDP since the 1970s, which is incredible when you think about it. Net investment, after replacing the wear and tear on existing capital, is half as much as a share of GDP as it was in the 70s. Well, the whole point of neoliberalism was supposed to recreate the conditions for successful private investment. But in fact, that wasn't the whole point of neoliberalism, was it? The point of neoliberalism was something else. And in fact, they've kept a tight leash on real investment and growth, because if it gets out of hand, then workers are going to feel confident and they're going to start demanding things again. So lo and behold, you're constraining the real growth while you're allowing and facilitating this incredible growth on the financial side. So it's no wonder the two sides get out of whack. Now, I think the current crisis, as Greg said, exposes many important failures of that neoliberal model. Financial stability was a key core goal of neoliberalism, actually, after the mess that was the 1970s for financial markets. And they thought by conquering inflation and conquering workers, they could then have stable financial markets, and of course that's not true. The financial markets are their own worst enemy in this regard. Failure of monetary policy, incredibly, it was a year ago that virtually all the mainstream economists were saying all the debates are over. we have a new consensus in monetary policy. It's called inflation targeting. We know exactly how to hit the sweet spot between unemployment and inflation, and we'll stay there, and there's no more debates. It was the Economist equivalent of Francis Fukuyama saying we've reached the end of history. And it was as short-lived as Fukuyama's as well. So clearly, monetary policy hasn't worked because it allowed this ridiculous inflation in asset prices at the same time as it was getting out the big guns the minute you got a 1% wage in the labor market. Failure of real accumulation, as I mentioned, a failure of public finance. I couldn't believe it. I almost fell off my chair yesterday when I heard Finance Minister Jim Flaherty saying in Western Ontario, Canada's not going to be affected by this because we ran surpluses. I mean, like, what on earth does that have to do with anything that's happening? In fact, the financiers who were scared shitless, that's a technical term, by the way, scared shitless on Bay Street. It means worried that you might not match analysts' expectations. Okay? They would love more government bonds to invest in, right? There's nothing they want more right now than more government bonds. So the idea that you're going to protect yourself against this meltdown by running surpluses is absolute nonsense. And now they've handcuffed themselves with this ridiculous ideology of balanced budgets at all costs. So you actually have Flaherty and Harper out there saying, don't worry, we're not going to go into a deficit, because if we have a bad recession, we're going to cut spending to make sure we balance our budget. I mean, even mainstream people know how idiotic that is. So there's a failure there. It is going to mean a lot for workers. Sometimes if it's a purely up and down situation in financial markets, stock market rise and fall, because most of us are not invested in the stock market, it really doesn't matter one way or the other. But this one is so bad and is now affecting the credit creation process of the banking system, it is clearly going to spill over into the real economy. Also through the construction industry in the U.S., which has been devastated. Residential construction has been cut in half in the U.S., and that's an important industry in the real economy. So anytime you swack a big piece of the real economy like that, you're going to have fallout. Consumer confidence, I mean, just reading the headlines makes me depressed, right? So lots of people are going to get depressed and stop buying as a result. There will be a recession, there will be unemployment, and all the pain that means. Another piece of it for workers is what it's going to do to the pension funding system, where we have set up this ridiculous regime that requires financialization for it to work. And the one thing you can say right now is thank God for the CPP, right? Everyone who said the CPP was a Ponzi scheme and we should privatize it, CPP is rock solid today. It is slightly invested in the stock markets, but not very much at all. Our progressive responses to the crisis, the ones that I suggest in the Red Pepper article, obvious strong call to re-regulate the financial sector, to reimpose discipline on private finance in terms of what they're allowed to lend and how they're allowed to lend it, and supplement that with a public role in finance. Simple things like deposit guarantees. I know that sounds quaint and sort of a little old-fashioned, and it alone wouldn't make a difference. But how do banks collapse? Banks collapse because enough people start to worry the bank is going to collapse that they go in and take their money out, and that causes the bank to collapse. That's how we are absolutely not one iota immune to the sorts of bank collapses that we're seeing in Europe and America, because no bank, the way our system works, is immune to collapse. All we need is enough people to be worried that it could collapse, and it will collapse. Now in Canada, we haven't had the same housing price meltdown, which is at the core of the US and the European problems. But sooner or later, people are going to start asking, okay, which Canadian bank is going to go? And once there's enough rumors out there, that alone can cause the collapse. Whereas a public guarantee system where everyone knows their money is safe up to some reasonable amount can stabilize it. Socializing the credit creation system so that we aren't dependent on private profit-making banks to do it all for us is another good response. And we have some mechanisms today. We've got the CMHC, we've got the Business Development Bank, we've got Export Development Canada, we've got all kinds of other some of them smaller local credit creating mechanisms that we could use to pump money into the economy to stimulate people to keep borrowing and buying cars and houses and everything else. We need credit in our system, there's no doubt about it, but we don't need private banks to do it. Finally, we have to make a strong call for a stimulus to the real economy that underpins it all, and that's where we need to call for support for workers who've lost their jobs, or for families who might be losing their housing, to give them money to keep their housing, to invest in the real economy, again, not just private investment, but huge public investment projects in infrastructure and public programs and environmental protection that we need. And yes, that will mean running deficits, and yes, that will actually be good for the economy at this point, so maybe there's a chance for us to break out of that handcuffs on the deficit that we've been living in. I think the ultimate lessons, though, of this whole thing for us are not economic, they're actually political. And this is a chance for us as progressives and socialists to use the moment to challenge the logic of profit, because in this case, the logic of profit as applies to private banking leads to such irrational, unfair, destructive results. You'll rarely have a better argument, a better case of actually arguing private profit is not efficient at all. It is rampantly inefficient as a way to motivate and organize what we're doing. That's important for us because in a moment of crisis, I think we all know it can go either way. And even in this election, it could go either way. It could be Harper who actually gets the benefit from this by saying, trust me, we're in a crisis and I'll handle it for you. In the big term, of course, as we know from Naomi Klein's work and others, the right wing always uses a moment of crisis to push for something more painful and ugly. So this is where we need our model and our analysis of it to push for a very different solution to the crisis. So thank you very much for your